So you are probably getting this question that we're getting a lot of. We've always got buyers and sellers that are kind of in the, background on the back burner. They're thinking about moving someday. They're thinking about, this and that and finding the right perfect solution. And so they ask us questions all the time along the way. And the one that we're getting all the time now, a lot from sellers, especially people who might be interested in downsizing, but also people who are upsizing. Why would I trade my fabulous interest rate that, by the way, people's ego is attached to? That's something they feel like they won. If you talk to somebody and they say, I've got a 2.25, they're very proud of themselves. They had probably absolutely nothing to do with the fact that they actually got such a low interest rate, but they are really thrilled patting themselves on the back for it. So that's something we have to deal with, right? So if they're saying, why would I trade in my 2.25 for 6.25? Like, that would be stupid, is what they're thinking. But it might very well not be stupid. So what are some things, Danielle, that we've been talking to lenders about and been talking to one another about and realizing are the factors that we as agents should be pointing out when people bring up this question?
Well, first of all, and this is we're in a service industry, and at least that's how you and I see it, is a service industry that has sales attached to it, without being, disingenuous. But people need to feel good about their decisions. And when the entire world's telling them it's an awful time to buy, but they are struggling to go up the stairs, or all of their kids are in one room and getting older and older and need a little bit of privacy, a little bit of space. They're walking home, coming into the house is no longer enjoyable. It's just a bunch of stress.
Yes.
That we need to help them and understand that it is okay, that it's not a bad financial situation. If they own a home right now, if they're renting, there are so many ways that they can get into for a small amount of money more, relatively, for them to be in the place that they need to be in. So I think that's very important for us to hear them and hear what their fears are. Their fears are hearing from everybody that they made an awful decision.
Yes. Yeah. And that somebody else is going to do better, and they're going to have FOMO, that somebody else got, a better price on the house and a better interest rate. And they're willing, without thinking about it, to suffer through whatever it is they're suffering through in their current home environment in order not to lose the thing that they're clinging to, that interest rate that they have. Or maybe they bought at the bottom of the market and they've got that double. Not only did I get my house for 50 cents, but I was able to refi and get it at 2.25. So now they are the gloater at every Thanksgiving, for everybody since then that had to pay higher prices and pay higher interest.
Absolutely.
It's going to be hard for them. So when we can go to them and say, listen, you've got, $50,000 in credit card debt. If you took some of this $200,000 or $300,000 you've got in equity, because you did such a great job buying your house at that low time.
Yes, right.
And you knocked out that debt that you've got, or somebody moving on the way up. You've got, $75,000 worth of student loan debt, and you're living all in 4 rooms, and you've got 5 kids. When you moved in, you were pregnant with the first, and you don't have a basement, and you don't have that backyard, and everything in your life is stressed and strained, and you've got equity because you were so smart. You bought in 2014. So that was when they needed a house, but so take some of that, throw it at this debt, and move into another house at the same time. You've got your 20% down payment still. You don't have to pay PMI. You're going to be in this higher interest rate, but it's nowhere near what that other debt is.
And we heard this week that we as a nation are in the highest amount of debt we've ever had, credit card debt and others that we've ever had.
And highest equity ever.
and the highest equity ever. So we need to make that's the point of investing in houses, right? Yes, it's a roof over your head. It's better, you know, the 7% to be cliche, the 7% is better than the 100% of renting. But you bought this house to help you in the future. And so when somebody is, you know, paying high teens for credit card debt and making minimum payments or not seeing, you know, an end in sight, or you said the student loans that are a lot higher than they were when I was a kid.
People could be paying $1,000, $1,200, $1,500 a month between their student loans and their credit card debts. That goes a long way on a mortgage. So,
absolutely. And it's a fixed rate, right? These mortgages, for the most
right.
part, there are some arms out there, but they're not less than 10 years. But these are fixed rate. There's fixed rates out there. I would much rather have a 7% for my home and the student loans I just paid off, or with the equity in my home. Because when you pay off, you know, for every 10-ish $1,000 somebody puts down on a house, that's only about a $50 difference on their mortgage payment.
Right.
How much of a difference in somebody's life could $10,000 towards their credit card debt or their student loans? That's certainly more than $50 a month.
Absolutely.
Difference. So we really need to help them figure out, and they're ashamed, you know, that again, debt is supposed to be ashamed. Like, it's really about the outside forces out there.
Right. And they like to feel like they've got equity in their house. I get it. And especially, you know, anybody who went through the last crash, equity feels like security. Well, if you've got equity in your house and you've got $50,000 in credit card debt, you do not have equity in your house.
Correct.
So we need to help them understand that. We need to help them pass the emotional part of it, I think is an important thing that Danielle and I do often with our clients, and help them understand that it's not a failure. This is a really smart thing to do. They were smart when they bought at the bottom of the market. They were smart when they refied for that low rate. Now they're going to be smart. They're going to switch into another house when it's the right time to do it.
Absolutely.
And you know, if you are a realtor and you work, well, either with buyers or sellers, but especially if you've got a listing or two right now, there's not a lot of competition out there. So get out and don't be in the position that you were in last spring and could very well be in this next spring, because you might not have noticed, as much as things might be sitting on the market, we still don't have any inventory. So keep your buyers out of that future competition by getting them into something now. And if they're relatively comfortable, they might want to buy now and sell in a couple of months. Right. Spring market is pretty much always more robust. We don't know that prices will be better, but they could be. And so if that's something that they want to do, it might be something that you recommend. But this is always, for the years that we've been in this business, this time of year is when anybody who wants a deal on a house and to have a little bit of breathing room and buy without anybody, on their back, this is the time to do it. So it can be a great time to buy a house. Less inventory, less choices, but far less competition.
Absolutely.
So help your clients look at their living conditions and whether it works for them, and make a decision based on all the right things instead of just a headline. Absolutely. Thanks so much. We'll see you next week. Happy Thanksgiving.
Happy Thanksgiving. Bye-bye.